Hello and welcome to this edition of the Market Share. I'm Paul Gifford, Chief Investment Officer at First Source Bank. Joining me today is Noreen Kazi, a Senior Portfolio Manager on our team. Noreen, in most of our emails and videos recently, we have been talking about U.S. markets and our outlook for 2023. We really haven't spent any time talking about international equities. So what is our international equity outlook for 2023?
Thanks, Paul. Well, 2022 was a challenging year for international equities. We do see brighter prospects looking into the new year. Over the course of last year, global economies saw slowing growth. They were facing high levels of inflation, also periods of lockdown due to COVID, and spikes in energy prices, along with agricultural commodity prices. So looking forward, we do see brighter prospects with China announcing the end to their zero COVID policy and the full reopening of their economy. As you can see in the next graph, China's growth is expected to be much stronger, while we anticipate slowing growth in both the US and EU economies. We now expect China's GDP to nearly double from just under 3% annualized growth in 2022 to nearly 6% for the full year 23. This growth will be driven by increased consumption and services as consumers draw down excess household savings and release pent-up demand. China's growth will also have positive spillover effects, especially for Asian countries and emerging markets. Asian countries with strong trading ties to China will benefit, as well as those emerging market countries exporting commodities or raw materials to China. And finally, those countries that will draw tourism dollars from China will also benefit. China's reopening will also have a positive impact on international developed markets. In the Eurozone, we expect Germany to benefit the most as they have the strongest trading ties with China. However, we expect the total Eurozone economy to also benefit with economic growth of about 0.5%, especially since about 20% of European company sales are also tied to the Asian markets. As you can see in the next graph, Eurozone Composite PMI, which stands for Purchasing Managers Index, which is a measure of business activity, has recovered to over 50, indicating an expansion of business activity in manufacturing and services for the first time since about mid-year last year. While there were some concerns of a moderate recession occurring in the Eurozone this winter, the combination of China's reopening and a very mild winter, which prevented potential energy shortages, have improved our outlook for the Eurozone.
So Noreen, obviously that's a pretty good outlook for international equities, which has had a very difficult run the last several years. What are some things that we are watching for on the negative side related to international investments?
Sure, Paul. Some things that we're monitoring. While we believe we are past peak inflation around the world, there is some areas to be cautious, particularly with China reopening. We could see an increase or some pressure on commodity prices, particularly energy. So that's one thing that we're watching. In addition, with emerging market stocks, while we do believe there is additional upside potential, they did have a nice run at the end of 2022 when China announced that they were ending their zero COVID policy. And finally, with the Eurozone, while we have increased our outlook as far as their economic growth, the potential of a mild recession is not completely off the table, especially since we do anticipate the ECB will be raising interest rates multiple times this year.
So there's still challenges, even though we're getting more excited about international investments. So Noreen, as always, thank you for sharing your insights and international investments today. As always, we're looking for opportunities to improve your portfolio and continue to grow your assets. And thank you for the opportunity to serve you and your family, and have a great day.